We're talking about software.
I think we need to continue talking about software in different shapes and form.
Yeah. This chart we used when we were talking about the cybersecurity industry and how they get paid, what the cybersecurity industry looks like, the layers of it. And one thing that we didn't talk about at that time was the API layer. Let's call it that. It's a product layer. And you'll see that there at the very bottom of this upside down triangle, we have Twilio, Bandwidth, and Zoom. Tell me why we're talking about this in this setting, comms software.
First, some of these communications software stocks have bucked the SaaSpocalypse and software apocalypse trend this year. Why is that? I think the simplest answer is they were kind of already beaten up and cheap entering software apocalypse. The hardest hit companies in software apocalypse, with some exceptions, like Adobe and Creative Software, was already beaten up and just got beaten up even more. But by and large, these names have been deeply out of favor for years since the pandemic era came to an end. Suddenly, the market was looking for some cheapness, and it found these companies that actually have pretty sticky customer relationships. There was some value to be had there. And so they've actually bucked the trend and they've gone up. The cybersecurity platform companies that we talked about a couple months ago got that well timed in February. But in addition to that, there's this thing called APIs, which we had a write-up about 2 years ago about time to think of software not as technology, but as just another product. That's more true today than it was even 2 years ago because of AI. There's so much software, especially non-enterprise software, and especially not vertical software, just software embedded in normal company operations that will benefit from APIs, which you can almost think of them as instructions that help you make use of off-the-shelf building blocks. So you can vibe code a lot. You can vibe up all sorts of cool, nifty-looking applications, but the functionality may not be that robust. And so you want to buy a couple off-the-shelf parts and pieces. For example, maybe you want to embed messaging of some sort, text messaging, email messaging into your app. And so you grab these APIs from Twilio or Bandwidth and voila, for not very much money at all, you now have messaging capabilities or push notifications or something like that embedded in your app because of the API these companies provided.
Interesting.
So another way to invest in software is looking for companies that provide the tools needed for other companies to build software. And APIs are an important part of that. Let's talk about why the stocks went up, though. That's what everybody cares about. Why did the stocks go up?
Yeah, let's look at some charts. My favorite.
Who the hell cares about the business? Tell me about the stuff.
Tell me about the money. Okay, so here's Twilio. We have it broken down by revenue, operating profit, and free cash flow. Total revenues in blue. And you can see that really, this is from September 19th on a quarterly basis, all the way through March 2026. Pretty up and to the right revenue growth. Not huge, but relatively solid up and to the right.
They definitely slowed down during the bear market in 2022 and 2023, but revenues reaccelerating back towards 20%. If you look at the financial reports, you will notice with Twilio, there is something you have to include here, especially with messaging APIs like this, texts, push notifications, there's identity services in here as well. They do exclude the pass-through fees that they get assessed by carrier networks. So they provide as reported revenue, but also the organic revenue, which excludes that pass-through of the network fees that they pass on to their customers. So the revenue growth is not as good as it appears on the actual headline, but mid to high teens % revenue growth, not bad for a company that has by and large been forgotten and left for dead.
They're profitable on the operating basis. Free cash flow is coming along.
This is one of the issues with AI. I think this is just a dead horse that we'll keep beating. It's not just that investors want reaccelerating revenue. If there's going to be reaccelerating revenue, they also want proof that the heavier investment into AI capabilities is going to pay off. The free cash flow did dip because they are investing back into the business again, but because revenue reaccelerated, investors are going to give it a pass for now because they expect that money will come back in profit later on after the R&D cycle kind of eases up.
Here's a look at the balance sheet, total cash on balance in green and long-term debt in orange. This looks pretty decent.
Yeah, it still is. There's some stock repurchases over the last couple of years. That's the primary reason the cash balance got reduced, but in pretty good shape. This is not an incredibly fast growing business. They still have stock-based compensation that they need to get more control over. They did get it below 10% of revenue in the latest quarter. So that's something to take note of. And along the way, they've tried to offset that by repurchasing stock. Balance sheet is a positive here.
All right, and we'll look at the same metrics here with the company Bandwidth. This time, total revenue is in green. This one is a bit more cyclical, seasonal. You can definitely see some changes. Looks like a nice little roller coaster, but still going up.
Up and to the right.
Operating profit. This is where we see a little bit of negative.
More investments being made.
And free cash flow in blue, which is actually quite good.
One thing I think is worth pointing out on this is you mentioned seasonal, cyclical of Bandwidth. Notice in the last quarter, there wasn't really the typical Q4 to Q1 drop-off in sales that you can see in some previous years. One of the reasons for that is, among other things, they have higher customer investments being made into voice-powered AI assistants. And one of those new customers that they are helping power is Salesforce. So Salesforce is a new potentially big customer for Bandwidth, powering some of Salesforce's new AI agents, voice-powered AI agents. They think that there's a lot of upside from that. And yes, possible reacceleration of revenue. You are going to see the hit in profitability as they invest to support those new endeavors, but positive things for communications software.
And then here's a look at the balance sheet. 50 million in total cash and long-term debt, 149 million.
They've gotten a lot of debt paid off, so that's good. I see a question.
But if people are concerned about token usage, as they recently have been, they would try to reduce their AI usage for things they can avoid. Would this cause SaaS companies to get a lower ROI on their AI infrastructure spending than expected?
You could argue that this concern over token usage, especially as costs go up, some of the AI companies are now trying to monetize. OpenAI and Anthropic want to IPO. They're going to need to show investors progress on not just revenue, but also profit. We're starting to see more of that happen. So as some customers start to realize that maybe their present use of AI is unsustainable, maybe that's good for enterprise software companies. Maybe they go back and look and say, hey, this old vendor that I still have or used to have, are they offering some of these features that I was trying to get done with my AI agent and my team of vibe coders? Maybe we go back and purchase a couple seats because these software companies, some of them are finding economical ways to bundle those AI features directly into their offerings. So you could argue this both ways. At the end of the day, software is deeply out of favor. And some people would like AI and chatbots and AI agents also to be out of favor as well. And so they're going to pump this narrative. But at the end of the day, software is not going away because it's a top way to automate tasks in your business and drive profitable growth. So one way or another, be it via the AI labs and AI agents and spending on tokens or via SaaS vendor or whatever, software is not going away. The money is going to go somewhere. These two checklists that we talked about, the first one we did all the way back in February with the cybersecurity video, and then we had an additional one later and talking a lot about software this year. Both of those thesis checklist slides have been combined and are now on the research dashboard. Our hope is this will help you develop a thesis for businesses that you own, and hopefully you'll go through lots of businesses and get a hang for developing your own thesis, how to ask hard questions, because remember, conviction is built not in confidence of everything that you think will definitely go right, but understanding all the things that could go wrong with the investments that you do decide to make, with the stocks you do decide to buy.